have some cash to put to work into beaten down stocks? Like getting higher yields and more potential total return for your money? Want to know my top 5 stocks for July 2022? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal 6-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. I've said it before, I'll say it again. Short-term volatility is a long-term opportunity. Well, volatility this year has been off the charts, and so opportunities are almost everywhere. And that is especially true among high-quality dividend growth stocks. These are some of the best stocks in the market. These stocks represent equity in world-class enterprises that are demonstrating how great they are by paying reliable, rising cash dividends to their shareholders. It's ever more cash in hand. It's proof in the profit pudding, you might say. I've been investing in high-quality dividend growth stocks for more than a decade now, and I have been particularly aggressive with capital deployment when volatility has been elevated like now. That's because valuations have been low, and a lower valuation means higher yield, greater long-term total return potential, and reduced risk. Buying the right stocks at the right valuations helped me to go from below broke at age 27 to financially free at 33. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. As great as these stocks are, not every dividend growth stock is a good buy at every time. Focusing on the very best long-term ideas right now is what this video is all about. Today, I want to tell you my top 5 dividend growth stocks for July 2022. Ready? Let's dig in. My first dividend growth stock pick for July 2022 is Comcast Corporation, stock ticker CMCSA. Comcast is a media and entertainment conglomerate. Comcast gets a bad rep as some kind of dying company. Are people cutting the cord? Yeah, you betcha. However, Comcast is more than making up for video losses with gains in broadband. With access to high-speed internet more important than ever, that bodes well. And you know, that's almost beside the point. The real point is, Comcast is a massive company with interests that extend far beyond basic cable television. This is why they've been able to post up a 7.1% compound annual growth rate for revenue and an 11.5% compound annual growth rate for earnings per share over the last decade. Double-digit bottom line growth has, unsurprisingly, led to similar dividend growth. The conglomerate has increased its dividend for 15 consecutive years with a 10-year dividend growth rate of 16.3%. Nothing dying about the dividend or the growth of the dividend, that's for sure. Further proving that point is the fact that the payout ratio of 34.8% shows us an extremely healthy dividend with plenty of room for continued growth. If all of that isn't good enough, the stock also offers a 2.7% yield. Good dividend metrics here across the board. This stock has been weak this year, and that is one of the reasons I like it so much. When stocks go on huge runs and become expensive, I can become quite unenthusiastic. However, when they get beaten down and become cheap, that's when my mood turns into one that's far more sanguine. This is especially true when the business is holding up and it's simply a case of the stock becoming unpopular for whatever reason. Indeed, Comcast, the business, is doing well, but the stock? It's down more than 20% this year, more or less tracking the broader market. I think this disconnect has created a rather favorable valuation. We're right now putting content together on a full analysis and valuation video for Comcast, and the video will explain why shares could be worth $57.77 each. With the stock currently priced at less than $40, I see a lot of upside potential here with this name. Take a good look at it. My second dividend growth stock pick for July 2022 is Essex Property Trust Inc., stock ticker ESS. Essex Property Trust is a real estate investment trust that owns and manages apartment communities. This is a great business that offers a simple investment case. We're talking about shelter here, a basic need in life. Now, we can quibble about luxury and how far above and beyond a basic need a luxurious apartment is, but at the end of the day, we all need somewhere to live. This is why I love apartment REITs in general. What makes Essex Property Trust special is their market advantage, and I've already spelled that out in another video that will go live soon if it hasn't already. Also in that video, you'll see how well this REIT has been managed, which has spelled out solid growth for years and years. Revenue has compounded at 11.5% annually over the last decade, while funds from operations per share has compounded at 8.5% annually. Another thing that's special about Essex Property Trust, the dividend. It's the only apartment REIT that is a dividend aristocrat. In fact, it's one of the very few dividend aristocrat REITs, period. The dividend has been increased for 28 consecutive years. The 10-year dividend growth rate is 7.2%, and you're pairing that high single-digit dividend growth with a yield of 3.4%. That combination of yield and growth is right in the sweet spot for me. Plus, with a payout ratio of 63.1%, we have one of the healthier payouts in all of REITdom. I view this as a relatively low-risk REIT. It should command a premium. Instead, it's available for a discount. As I noted earlier, our upcoming video will be doing a deep dive into the business, and in that video, you'll see why the valuation is so appealing, but I'll lay it out again. The price to cash flow ratio is 16.6 right now. The stock's own 5-year average price to cash flow ratio is 21.7. That's a pretty severe disconnect on the cash flow multiple, which would seem to indicate some kind of weakness in the business to warrant the discount. Yet there's been no weakness in the business. Their most recent quarter, Q1 fiscal year 2022, showed an increase in the guidance for funds from operations per share, same property revenue growth, and same property net operating income growth. The business has been getting stronger even while the stock, with its 26% dive year to date, has been getting weaker. I've been personally buying the stock recently. You may want to consider doing the same. My third dividend growth stock pick for July 2022 is Medtronic PLC, stock ticker MDT. Medtronic is a global developer and manufacturer of medical devices for chronic diseases. I love the healthcare space. It's secular growth. You have an ever-expanding circle of potential customers since the world continues to get bigger, older, and wealthier. I can't imagine any future in which more older and wealthier people will be demanding less quality healthcare. It's nonsensical to think that way. Medtronic is a great business that has been doing well for years, evidenced by their 7.5% compound annual growth rate of revenue and 5.7% compound annual growth rate of earnings per share over the last decade. And I think they stand to do even better in the years ahead, making a great business greater. That goes for the dividend too, which is already great. This dividend aristocrat has increased its dividend for 45 consecutive years. That's longer than I've been alive for. The 10-year dividend growth rate is 10%, and the yield is sitting at 3% right now. By the way, this is not a stock that often offers a 3% yield. Its 5-year average yield is only 2.1%, and since the payout ratio is a moderate 48.7% based on midpoint guidance for this fiscal year's adjusted earnings per share, I see this dividend aristocrat doing plenty more dividend aristocrat things. This stock is more than 30% off of its 52-week high, and I think it's become far too cheap. It's weird how fast the market can change. For years and years, Medtronic seemed to defy gravity. It pretty much always commanded high multiples, and a lot of investors lusted after the stock. But that's been flipped on its head since the pandemic hit, which affected Medtronic by temporarily reducing demand for elective surgeries. The stock is now available for low multiples, yet nobody seems to want the stock now. Well, except me, of course. I very much like Medtronic here. We put together a full analysis and valuation video on the business, which will likely be live before this video comes out, and that video shows why the business could be worth $120.99 a share. The stock is currently priced around $90. Medtronic used to be chronically expensive. It's now cheap, and it might be a good idea to take advantage of that flip. My fourth dividend growth stock pick for July 2022 is TROW Price Group Inc., stock ticker TROW. T. Rowe Price is a large investment management company. I've frequently discussed why the asset management business is so lucrative. Global capital markets are the rising tide lifting all boats located in the tide, and being one of the world's largest asset management companies, T. Rowe Price may as well be operating a battleship in the tide. They benefit disproportionately from their scale, and so do their shareholders. The company's revenue has a compound annual growth rate of 11% over the last decade, while its earnings per share has a compound annual growth rate of 16.3%. Fantastic growth. Also growing fantastically is the dividend. Yet another dividend aristocrat on today's list, T. Rowe Price has increased its dividend for 36 consecutive years. The 10-year dividend growth rate is 13.3%, which easily beats inflation even in this inflationary environment. Usually when you get a growth rate that high, you have to sacrifice yield, but not in this case. Thanks to dismal stock performance this year, the stock's yield is now 4%. I've been investing for more than a decade now, and I've almost never seen this stock yield 4%. That's utility stock territory. You know, stocks that don't grow very much, it's crazy. And with the payout ratio sitting at 38.8%, the big dividend is in absolutely no danger whatsoever. Want a great deal on a great stock? Well, here you go. This high-quality dividend aristocrat looks cheap from every single angle, including the single-digit PE ratio. I never thought I'd live to see the day when this stock would command an earnings multiple below 10 outside of a major recession. We recently highlighted this stock in a full analysis and valuation video, estimating intrinsic value for the business at $155.40 a share. With the stock trading around the $120 level, it looks severely undervalued. It's hard to pass up T. Rowe Price here, so why do it? My fifth dividend growth stock pick for July 2022 is VF Corp, stock ticker VFC. VF is a worldwide apparel and footwear company. Apparel and footwear is something we all need, and so there's built-in demand for what VF sells. But what elevates VF is their brands. They have some of the best brands in their respective niches: Vans, The North Face, Timberland, and Supreme. Terrific brands tend to lead to terrific results over the long term, even if the last 2 or so years was rough for VF, along with plenty of other companies. Admittedly, revenue has compounded at less than 1% annually over the last decade, while earnings per share sports a compound annual growth rate of less than 3% over that same time period. But a lot of this was due to a large spinoff that was completed right before the pandemic hit, a double whammy for sure. However, it's the future growth that matters most, and the near-term forecast for the company's earnings per share growth is well into the double digits. That recovery and the ensuing growth should keep this dividend growth machine fueled for years to come. And what a machine it's been. The company has increased its dividend for 49 consecutive years. Yes, we have another dividend aristocrat on today's list. We're spoiled for choice when dividend aristocrats left and right are on sale. This stock now yields 4.2%, which is practically unheard of for this name. That's 180 basis points higher than its own 5-year average yield. And the 10-year dividend growth rate of 12.4% pairs awfully nicely with that kind of yield, although recent dividend increases have been quite modest. I suspect dividend growth will pick up again in the next year or two. Meantime, the dividend remains protected by a payout ratio of 59.7% based on midpoint guidance for this fiscal year's earnings per share. This stock has been beaten like a drum over the last year, but all that's done is make the valuation as compelling as I've ever seen it. The stock is down by 40% over the last year. Not as bad as some of the high-flying, no-profit innovation stocks out there, sure, but to see a profitable dividend aristocrat fall like this over a short period of time is a rare, rare sight. Of course, what's happened is that the valuation has been compressed to a level that I've never really seen before. We actually put together a full analysis and valuation video highlighting the appeal of VF right now, and that video shows why the business could be worth $65.78 a share. That video should be going live very soon. With the stock sitting at right about $48 right now, we're looking at a significant amount of potential undervaluation. Great business, great brands, great yield, and great valuation. This name should absolutely be on your radar, if not in your portfolio. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these top 5 dividend growth stocks for July 2022. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It'll allow me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.